What is going on, guys? Welcome back. It's been a while, so a big investing video for you today because so much has changed, but we'll get into all of it. First of all, I'm a Weeble Ford influencer. You guys know, link down in the description. You sign up before the end of the month. They're going to continue to give you 4 free stocks. All you have to do is deposit $100, and they will give you at least $21 in free stocks. Just sign up for an account. Don't have to deposit a dime. They'll still give you 2 free shares as well. We're up to $246 sitting there in a cash reserve waiting to be spent. You take a look at the positions. And as I've mentioned, man, it's been all-time highs for quite some time. You know, we go back and talk about buying last week. We would have been down 3% from where we are today. It seems like it's just never going to go back down in the market. You know, you take a look at CVS. We bought at 64. Is it ever going to get back there? It doesn't seem like it. You know, maybe Cisco Systems. So to me, you know, maybe they get back to 40. I don't know. It's just setting realistic price goals and just accepting where we are. You know, I've said before, Realty Income under 60, Stag under 30, I'll consider adding, but I'm not in a big rush. But one thing I do want to take advantage of is those pullback in the market. And you can see, not because the market is pulling back, you know, specific stocks can pull back a bit. Tesla did kind of pull a little bit last week. Obviously, you guys know 6 shares in my Robinhood portfolio, also QQQ, ARK. So I'm built into some of them in the ETF side. I wanted to get involved with ETFs on the Weeble side, and I looked through a bunch of them. I spent hours actually on this, by the way. I looked at cars, I looked at FTXR, I looked at IDRV. You know, basically what I was looking at was over 6% Tesla with a lower fee and a dividend. That really left me looking at, as far as a lower volatility, you know, IQM, SFYF, FDIS, and QCLN. Those were basically what I was left looking at, and those were on the higher end of the price target. I wanted around $20 to $60, but the problem is a lot of those $20 stocks have been pulled so much by Tesla that you're almost scared to enter them. So what I decided on was settling with FDIS, which I love because it has actually 31% Amazon and 7.14% Tesla. They pay a quarterly dividend. I got in at $16.99, 2 shares. It might actually fluctuate just a little bit on the price because I split my days on them. And QCLN, which was 63.61. They are 5.78% Tesla and pay, again, a quarterly dividend. So, to me, those were the best options for my budget. Obviously, you know, look the ETFs along your lines. Yes, they can sell them out at any point, but, you know, if they're going to do that, that's pretty much not something I can be overly concerned with. Also, if you're looking at this and you follow the portfolio closely, you know that Kroger is a new ad. I mentioned, I love Kroger. I love having the supply of food. That's why we have land. That's why we have global water. I also like having Gladstone Capital in a lot of my portfolios because, listen, this is discretionary income for me. So to me, it's also important that some of this money goes back. And right now, banks not lending to businesses and support. And I support, a company like Gladstone Capital. It's going out, lending to smaller businesses that need assistance in this time. And, if it's $50, if it's $500, if it's $50,000, anything I can do, I feel better about it. Also added to this list was a free share of Lattice. Now, if you follow along, a lot of shares of Cladera have been sold. I'll get into the free shares in just a minute because I got a really good one I want to talk about. But the semiconductor market is just huge. We got Teradyne last month, Lattice this month. I don't believe I'm going to get rid of them anytime soon, even though I did sell off 2 shares of Teradyne, because AI is just so prominent. I feel like it's going to be the next big move. However, you look at what we're at now with the free shares, still have, I think, about 5, maybe 6 shares of Cladera left to come in. I might hold, but I really like selling them in that $12 to $13 range. Funko, yes, the delightful figure manufacturer. I've actually got a couple of them with me right now. And although I love them, they're whimsical, they're cute. I know people are like hit or miss on the Funko figures. From a business line perspective, they have so many different affiliations with major sporting organizations. It's hard for me to understand how they can struggle. But as I said, it's either seems like people love them or absolutely hate them. So I'm torn what I'm going to do. If they can get in the $11 range, I'll probably sell them. But I also may wait till February when they have their numbers come out. Their revenue numbers may be up higher because it is a lower end gift. The economy is still a little bit pulled back, as I said, disconnected from this market. So I have a feeling that, Funko may actually have a decent holiday run, being on that kind of economy gift line. May see a bit of a surge, and I may be better off selling them in February than right away. But top of the list, and this is an interesting one, this kind of shows you where, when you get into investing, you have to assess things differently. I'm not a big Snapchat person. I don't think I've ever used Snapchat, but I went out, I looked at their numbers, and to me, it's very interesting that although in terms of user base, they're very much smaller than, say, Twitter or Facebook, when you look at per member, they make just as much as those companies. And because they're a very specific demographic, because they are exclusive only to their own app, it gives them some unique leveraging. So I would never go out. Honestly, if you gave me $50 today and said, what would you buy? Snapchat would probably be one of the last things I would recommend or be on my list. I'll take a free share of it, and I very well might sell it if it gets in the $80, $100 range. I don't see that happening anytime soon, but to be honest, a lot of times you get free shares in companies and you have to learn about them, you have to understand them, and you have to assess whether you want to keep them or not. Sometimes you make good decisions, sometimes you make bad decisions. I'm going to learn, because in 10 years, if I look back and Cladera is, $20, $30, I'm going to hate what I've done to myself. But at the same time, I feel like right now, taking advantage of the market, the best thing you can do is sell some of these stocks that you're not 100% sold on, hold the funds, and know that at some point, it seems like there's going to be a natural pullback in the market that's going to give you the opportunity to get into shares that you want at a more comfortable price. I mean, certainly don't think we're going to see anything like we saw back in March of last year. I hate to say something like this. It would be nice if we could see a pullback like that because, for my own selfish reasons, I bought stocks at prices that I don't know will ever happen again, right? So would you like to go back in time and take what I've learned from that lesson in my life and reapply it? Of course. But, do I want to have the whole economy fall apart in order to do that? Absolutely not. So, the last thing I want to see is that event reoccur. But at the same time, it would be nice if we could get a little bit of a correction in the market, because to me, I feel like we've really become disconnected from reality with these prices. And hopefully you guys are doing the best you can to assess where you are. Take profits when you can take profits, and wait for stocks to have a fair value to you before you repurchase them. I really think that's all you can do in a situation like this, and hope for the best. I mean, we're in the best, so it seems strange to hope for it. But other than that, you guys know, long video, appreciate you watching it. I will be back in the week with more commentary.